We're off to Button Moon and we follow Mr. Spoon Button Moon. Well, hello boys and girls. Let's lay Forex bare.
Matron, take them away.
And a warm welcome to one and all. This is your first time here. I'm the big fella Scruff, and I'm trying to put trading in the real world. Genuinely am. Now on a Saturday, as it is today, obviously the markets are quiet. I like to sort of grab a cup of coffee, maybe switch the camera on and give you a few of my thoughts. And it's normally triggered by some of the emails or messages I get throughout the week. Now, if I'm going to lay Forex bare, what does that mean? Well, I'm going to put it into two halves. Now, when it comes to sort of watching a YouTube video of traders and one thing and another, it becomes a bit bipolar. Some like it, some don't, sort of thing. So I'm going to kind of tell you what it's like to be a trader on YouTube. And then I'm going to answer the ultimate question. Why do you fail? But one thing I've just succeeded in is getting my coffee. Because we all know Scruffy likes a coffee.
There you go.
Fantastic. And he likes Winky as well. That's Winky, my wonder wife. So what's it like being in the public eye? Well, as I said, it's a bit bipolar. For the most part, it's wonderful. I love my job and I'd like to think I'm very good at it. But YouTube is not the job. Trading is the job. And that segues into the last part of this. But in the cyber world, as you watch, it's very easy to get caught up in the hype. And again, that's going to segue into the last part. And why is that? Because there's a massive way this industry is sold, and it is sold on the flashy lights rather than the substance. Now, I'm going to give you a case in point of substance. Here are my statements. As you can see, they're by a third-party prop firm, so they can't be manipulated, and what you see is what you get. I hold a very good hit rate. I also hold an excellent rate of return. Now, I don't go for risk reward in the normal sense because I come from a business background. I work on ROI, return on investment. I'm prepared to put X amount of money on the table to make X amount of money. It's a different concept, but it's a way that works for me because my job when I was in industry was partly a trader. We used to have to buy currency to buy goods in far off lands. So trading was part of my job, but not the way that you guys had it. You guys will see the Lambo boys.
They've done studies, 60% of the time it works every time.
That doesn't make sense.
That's kind of, even if they're doing it, it's a pipe dream for most. And because of human psyche, the way we are, we sort of love it. You see all these big numbers, unattainable lot sizes. There's a lot of things that you're not told about. If you see somebody that's trading sort of, I don't know, sort of 3 lots at a time, that's 30 quid a point. If their account is under £50,000, they're stressing that account beyond belief. And the chances are it ain't going to last long, all right? It needs to be nearly 6 figures, okay? I have a big account. I can just say take about 30, 35 pound a point, you know, and I am six figures. But I don't trade that. I start at £5, half a lot. Why? Because I don't want the stress, and then I'll build up into it. Now that's an easy way to do things. But how long did it take me to get my account? Well, if you watch the flashy lights, we'll say it's 30 days to 6 months. It took me nearly 5 years. I started with very little. I had got it into a wageable account within 3 years. And then a couple of years on from that, it's continued to grow. And it's doing very well. And I'm very pleased with my results, as you see. So, where am I going with this? Well, what I'm going with is kind of be careful what you listen to. If you want the best teacher, believe it or not, it's yourself. Look in the mirror and ask yourself some simple questions. And the number one question you ask yourself, number one, is, can I afford this trade? That's it. Because that'll control your mindset. And if you can control your mindset, you're halfway there. Because when you're first starting, because you've seen the flashy lights, you've seen all of the glitz, and you're getting sort of dazzled by big numbers, you think that it's easy. Well, it's not. And you'll put a 500 quid in an account. I mean, I often get emails saying, I've got £200 and I'm looking to make £100 a day. Well, if you're starting with 200 quid and you're looking to make £100 a day, you would probably be the best trader on the planet. Because it ain't going to happen. It takes money to make money. But if you turn around and said you wanted to make sort of £2 a day, well, then that's doable. You know, it's a reasonable request. But then you've also got to think about how you're going to position yourself in the market. Now, one of the brokers I use, it has a minimum bid size of 50p. So by nature of the bid size, and that's the position size, you're going to put that account under immense stress in the beginning stages, which means it'll put you under immense stress in the beginning stages, which is why trading a small account is very difficult. You've got to be realistic in its expectation. Now, a way around that is, if you've only got a couple hundred quid, is buy a prop fund. Our prop fund of choice is 5%, and if you're interested, there's a link and a discount below. You can buy good size account with that, with the profit split. But then when you qualify, because you're instant from day one, if you take that challenge, there is a boot camp which is €95 or something. Anyway, you can go on an instant funded account for a couple hundred quid, pass it, draw your profit out, then put that profit into your personal account, and that way you've got a good return on investment, and you've still got the prop as well. So yin and the yang, it's making your money work for you. But I'm going to answer the question now. Why do you fail? And I'll sum it up with one word. Money. Now you're thinking, money, but isn't that what we're here for? Are we not here to trade to make money? Yes, you are. But the chasing of that money breeds fear and greed. Fear and greed creates emotional trading. And if you're trading from a point of emotion, you've already lost. Which is why when I'm speaking to my guys in the Discord, and I try and guide them the way, and one of the few that'll actually put my head on the block, as you see on my channel. You know, I don't use retrospective charts. I trade in the moment. You know, when you see me enter a market, I don't know the outcome any more than you do. The difference between us is I've planned it. So I'm planning to see what that outcome is, whether it's to a loss or to a win. And I don't lose that much because it is planned, you know. And when it's wrong, I mean, I got it wrong the other day with the Swissy. If you go through the videos, you'll see it. I ended up being right the next day. However, my criteria was starting to change. I killed the trade off for a small loss, but I was also trading the US 100 at the time, and that one ran off into its target, which more than paid off my losses. So it was all controlled and managed properly. And that's the other side of it. How many times do you go into market and you don't actually manage it? You just go. So I'm going to give you a little bit of a criteria to work to. First question you ask yourself, because you should know where you're getting in and you should certainly know where you're getting out. And that is for your stop or your profit. You want to know roughly where they are. If you've got an open-ended target, fine, but you must know where your pain threshold is, where you are wrong, and you have to bail. Because if you don't, the market will eat your account in a heartbeat, especially if it's small. You know, and I've done it. I've been through it. And I do it regular with the guys. I tell them, work with pain. And they'll look at me stupid. They say, no, we're chasing the money. That's where you fail. What you do is you focus on the pain and you eliminate the bad. Once you've eliminated the bad, whatever is left will be good. So the first question is, can I afford this trade? And if you're on a pounder point, and I'll tell you an easy way to work that out as well. But if, for argument's sake, you're on a pounder point and your stop happens to be 100 points away, well, that's going to cost you 100 quid. You ask yourself, can I afford it? Well, you've got a £500 account. You want to put 20% of that at risk? Bit keen. You know, got £1,000, 10%, £2,000, 5%. See the gist? If you say no, I can't afford that trade because I've only got 1,000 and I don't really want to do 10%. Half it. So you're not putting a pounder point on, you're putting 50 pence on. Right, okay. Are you going to pay 50 quid for this? I could do 50 quid on that. Right, you're happy with the trade at that point. So how else can you relieve the stress? Well, now you're happy with that initial sort of breakdown. How many times does the market move for you? Not very often. I've done this over 15 years and it's very rare I nail it on the head. You know, I very rarely catch the top, I very rarely catch the bottom, but I do get the bit in the middle. So I capitalize on the movement of the chart by breaking down my position, and I break it into 5. So now I'm at 50p a point, but I'll enter the first position at 10p. I'll let the market move against me so much, and I'll add another 10p. Move it backwards a bit further. I'll add another 10p, and then I'll move it further again, and I'll add another 10p till I've filled up my 50p. And then what happens is, because I know where the 2 fixed points are, each one of these backward positions costs less. So I'm not actually putting 50 quid on the table. I'm putting a hell of a lot less on. So it dials me down yet again. Now, I've been through this exercise with a number of guys, and I've kind of asked them their thoughts on it. And what they do is they keep adding into it. Well, that's called a Martindale system, and that's quite dangerous. No, 2 fixed points, divide up the position, and you'll be fine. So that helps you with your management. Now, how do you know how big your lot size should be in the first place? Well, again, I don't go for any of the sort of mathematical gymnastics that some people work out. Oh, my stop's 2% of the account and this, that, and the other. To me, it's all just bollocks. You know, you need to be able to do it quick. So I work on margin. In other words, how much I have to play with. Now, I have low margin on my account, so I just assume my account is the margin. Sometimes if you're with a prop fund, what I would recommend is you use the drawdown as your allowable allowance. So you might have your £1,000 account. Well, I work to £1 for every 1,000 or 50p for 500 if it's there or if it's underneath. Then it's just ready reckoning, and then I have it capped at 25 quid. And why? Because 25 quid will pay me safely, you know, and it won't stress my account because my account is big enough to take it. Now, occasionally I will push that out to 30 to 35, but that's in rare extremes, okay? And everything has to be in ducks in a row. So that can sort your position size out. So you've got a criteria to manage your position. You know what your position size is. Then how do you get into the market? Well, that's the next part, because again, it goes back to the flashy lights and the way the industry sold about the system, the magic system. It doesn't exist. Never has. The market will do three things. It will go up, it'll go down, it'll go nowhere. If you can recognize that it's going nowhere, which is very simple because the candles ain't moving, leave it alone. Just walk away from it. But if you can see that it's either moving up or down, then you can pick a bias. Now, when you're going intraday, that bias doesn't matter. You know, what you're doing is you're being market neutral. So you can look at the daily and go, well, I think this general market is moving up. Then all you look for during the day is buys. That's simple. Or you can look at it and go, well, I think this market is going down. Then all you're looking for is sells. You've been relatively neutral in your approach and simplistic. Now, once you've got that in your mind, you just need 2 points of attraction. Now, 2 points of attraction are levels. Now, those levels can be the support and resistance levels. Sometimes people refer to them as order blocks, where it'll be a zone. Let it move to that. If it breaks below and you're only looking for sells, then move down. And you can just use basic criteria. Is it under a 20 moving average? Yeah. Well, I'm only going to look for a sell then. Is it above? Well, I'm only going to look for buys. Where am I targeting? The next level. But what happens with the industry is to try and overcomplicate it. They think there is the system, the holy grail. This indicator shows this and that one shows that, so it's time to go and I've got to get in. Sometimes it's just as simple as the market's moving, I'm going to get involved. That's it. Well, it's a little bit more complicated than that, but that's the basic way of looking at it. Now, for me, my trading is very simple. I know exactly where the turning points of the markets are. And if you ever look at one of my screens, you will see that I have loads of lines on. In fact, I'll show you one just to illustrate before I wind this up. If I just take that Bollinger Band off a second and get rid of that. This is a market I was looking at the other day. If you look at, say, the daily chart, and you'll look at that and you'll think, bloody Nora, how many levels is there? Every level has a meaning. They are key swing points or they are key hypothetical points. Difference between them is a swing point is being tested fully. A hypothetical is based on a Fibonacci ratio. And if you think about it, all the markets are just a series of numbers. And Fibonacci works because it is a ratio of a series of numbers. So that's why I like it. You can look for one of your last sort of working days. So there's Thursday. You can put in the high, the low, the open, the close, and the midpoint. It'll give you a map as to where it's going. Drop it down into an hourly chart, just like so. And then you can work from one zone to the next. And if you look at the way the levels are formed, it respects all the time. And it's kind of why I was saying it don't matter which direction you're going, because throughout the day it visits both levels or gets very close to them. You know, it doesn't matter. Even here, swings round, goes back up, screams down, comes back up. Stall, 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 stall. So if you know how to put these levels in, you've got a roadmap, and it doesn't matter on the direction. You just pick a direction that you feel is the strongest, the double D as we call it, dominant direction, and you wait. So for argument's sake, if you're down here and you want to sell, well, we know you can't really sell because it's got nowhere to go. There's a solid level. You let it pull back up, and then you just buy it or sell it when it gets up here. Ka-thump. And why is that? Well, that one went straight through, went up, stalled on this predetermined level, and then you go, right, okay, as long as it holds underneath, well, that candle did. Right, I'm going to start selling. Boom, down it goes. Simple. And I can't stress that enough. The simpler you keep your trade, the easier it'll be. And that's why you fail. Because you're chasing the dragon, which is the money, and you can only chase it so long it's going to turn around and burn you. And the other one is you overcomplicate the process. It doesn't need to be complicated at all. Anyway, just a few thoughts from an aging dinosaur, I guess. I always cherish your comments. I answer every single one of them. I do my best. All my contact details are below, and I do genuinely respond to everybody who contacts me. There's also a free Telegram down there where you can come along. I drop in throughout the day, and there's a lot of wonderful guys there with no sellers, because I don't allow any dickheads or signal sellers or anything like that in there. It's just clean chat for you guys, and it was made solely for that purpose. And that's it. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.